Hello everybody, welcome to Day Trader Next Door question and answer time. It's a Saturday today and I'm over in La Belle Province picking up a rowing machine back there, heading back home to hopefully go out on the boat this afternoon. That's not for me, it's for my wife. I don't use stuff like that. Anyway, you got a nice drive. I'm going to take advantage of the time and answer some of your questions. Armando Zays says, do you ever consider trading larger size when volatility is down? It's a good question, Armando. I generally don't do that, no. When volatility is, it depends. If it's a little bit down, maybe, but like say in July, okay? July was rough. July was very flat. It certainly opened up a lot so far in August, which is good, which I expect going into the fall again. But when the volatility is abnormally small like that, generally no, because the volatility is small, the market's not really behaving itself, and to just go up in your size doesn't make sense to me, because when the market is super tight like that, it also is a little bit more erratic. The noise floor is higher, and it's just not the time to be doubling down on your position. It's just more, to me, the safe thing to do is to just expect less, be happy with less, and wait for the market to come around, which it always does. So that's the way I look at that. Arturo asks, how can I see the resting orders and kind of like what do they tell me? Arturo, that is from looking at a market depth window or a DOM or a ladder, however you want to call it. It's called different things in different programs. And what that does is it just shows you, it looks like you could call it a ladder because it sort of looks like a ladder. It's got all the different prices and they go vertically. Lower prices at the bottom, higher prices at the top. And then it's got on either side of that the quantity of orders on the bid and the ask. And that doesn't mean they're going to get executed. This isn't orders that are executed. This is just resting orders waiting to get hit. Now the thing with that is oftentimes if you see a lot of them, sometimes when it gets closer, within a couple ticks of the price, they evaporate. And they're not really real orders. They don't get executed, but it's still a reasonable gauge of kind of where the market is, where there's going to be demand, where there's supply. So that's kind of how I use it. If I'm in a trade long, say, and I notice that a certain price level a little bit above me, there's a huge amount of resting sell orders, then I will consider, getting out just before that. Or if it hits that, I got to expect a little bit of a bump down. The ladder itself is not going to get me into a trade. It's just, it gives some guidance as far as expectation on the trade and maybe, where is a good place to put your target. You're already going to have your target where it makes sense on the chart, but say if your target is, 5 points above that, but then you see there's 1,000 sell orders sitting at a certain price level, maybe we'll just be happy if it gets up right to or close to that price level and get out before those all have a chance to trigger. Only Like Nerd asking about trading the NASDAQ. I have traded the NASDAQ. I've also traded the Dow. I've traded the DAX too. The DAX was great to trade in a lot of ways also. I've had people ask about that. The reason that I settled on the ES and really just made that my index of choice is because it's kind of a Goldilocks, maybe not in July, but over the past 10 years or so, it's been kind of a Goldilocks market for me in that the liquidity is fantastic. Slippage is essentially zero as long as you're 10 or under in contracts. And, it's volatile enough, but it's well behaved enough that it just has served me well. So it suits me best as long as it continues to behave. It suits me best. The NASDAQ, the NASDAQ has some more volatility. It still behaves reasonably well, but it whips more. And the problem with it whipping more, it means you can get a little bit more out of your target quickly, but it also means your stops get hit more. You need a little bit wider stop. You often get some slippage on it, which is not a big deal because there's a lot more ticks in your NASDAQ trade than there is going to be in your S&P trade. The NASDAQ trades in $1 increments, the price that it is, as opposed to 25-cent increments on the price of the ES. Well, there's just going to be more ticks in your NASDAQ trade or your Dow trade, for instance, or your DAX trade for that matter. So a tick or so of slippage doesn't matter as much. But at the same time, it's nice to just pretty much be able to count on none. Then there's lots of people that have made their living trading the NASDAQ for the last 20 years. I know a couple of them that trade nothing but the NASDAQ and have, since the floor days, and that's been their bread and butter. And there's nothing wrong with it at all. It's just what suits you best. And for me, the ES suits me best. And I think it's probably easier, maybe. That's all up for debate. But anyway, hope that helps. Also had a couple of questions about what tick chart I'm using for crude. I got 1,000 tick on my crude chart right now. It usually hovers around there. I think I had it in the 600s before. But right now, 1,000 tick looks pretty good to me. The thing with the tick chart is, it's not an absolute. It doesn't have to be if you use a 1,000 tick chart, it's going to work, and if you use a 2,000 tick, it won't. It's just a matter of what sort of gives you the amount of candles that you like best. And for me, right now, 1,000 tick on crude looks good. Eagle Spirit, would you recommend TD Ameritrade for a new trader? Now, I'm not all that well versed in brokers because I have a limited number of brokers I can use. From what I know of TD Ameritrade, they're pretty good. They are more expensive in commissions for sure than a discount futures broker. I think if you're getting into futures trading, you should be using a dedicated futures broker because the margins are way less, the commissions are way less. It's just way cheaper to trade with them. With TD though, they might let you use, if you got money there anyway and stocks, they might let you easily just use some of that to trade futures. I'm not sure if it has a universal account like Interactive Brokers does or not. Interactive Brokers is great for that because they have the universal account. You've got one pool of money and margin that can be used for everything. Well, it's good and bad. I really think your futures trading funds need to be totally separate, but it's just, you can segregate a little bit of it without having to move it to a different broker. But for me, if you're going to, the only way I would trade is with a discount futures broker because my costs would be so much less than trading with TD or even Interactive Brokers, something like that. So if you want to get started with them and they're not too expensive in commissions, and you've got the margin to do it, that could be okay, but check your commissions. For trading the ES, you shouldn't be paying more than about $4 for a round turn on the full-size ES. That's, about a third of a tick. That's where your commission should be with a discount futures broker. If you're paying $10 or something like that, that's just way too much. This video is going to be a really rugged test of the voice isolation tool in DaVinci Resolve. Any of you that do video work of any kind, if you use Resolve, you probably know well of this new tool, and it certainly has been impressive so far. So if this video gets posted, consider that a great endorsement from me because this old truck is not quiet. Sam Yotis, sorry if I got that wrong. Sam says, I noticed on your screen you've got the daily and the hourly and all that sort of thing, but not so many internals. Do you look at those very much? Yes, I do. The thing is, I have a whole screen of 8 charts dedicated to internals. And that takes up one monitor space on one of my screens. But my screen real estate on YouTube is so limited. I just keep the one window of the ES there so I can blow up one of the charts full size or go back to the different time charts of the ES. But I do have tons of other stuff up on my screens, including one 8 chart layout that's all internals and corollary markets and things like that. Badrul Hussain said, just a thought, what do you look for when you analyze your previous trades? Now that's changed quite a bit, Badrul, from over, say the last 10, 15 years. I was much more rigorous going over my previous trades when I was learning, and we're still always learning, but when I was really, reaching for profitability, I would analyze them a lot more than I do now. I go back and look over my trades now. It's very much a surface look, and it doesn't take very long, because if I did something wrong, I kind of know what I did wrong, or did something right, I kind of know what I did right at the time. I don't need to study it as much because I'm just used to it. I know if I made a mistake. I know if I got, too eager. I know if I got out too early, whatever. So for right now, it's just kind of a surface glance. And essentially what I look for is how is my entry, compared to whenever I would see kind of a setup. How would my entry look compared to the best entry I could have gotten? That's one thing I'll sort of look at. And I'll look at the exit, see how much of that push did I get. Did I get out way too early? Did I get out after the first push, which I don't penalize myself for at all? Or did I, wait too long and wind up getting out a break even or loss or whatever? So those are the main things I look at. Again, just a quick glance at it now because I kind of know what I'm doing as I'm going, if I make a mistake or whatever. But I will always certainly go back either later in the day or the next day and see how my trade would have played out had I stayed in it. Rick SCA, thanks for your comments, Rick. He's asking about a more detailed tutorial on Sierra chart. I can't say that I've been using it for years, but I can't consider myself an expert on Sierra chart, Rick. I'm sure there's lots of other guys out there that know a lot more than me about it, really, because I only use just a tiny little sliver of its capabilities. But I will put that in the hopper and see if I can do a little bit better, maybe move a little bit slower so it's not going too quickly over it for the functions that we would use Sierra chart for. As far as the Sierra chart package that I use, I'm not in front of the computer, but what it is it's the minimum one that gives you the Denali data. They changed the numbers in that too. Now they have two sets instead of one set, but there's the first one that has just the Denali data, but doesn't have market profile charts and stuff like that, all the functionality unlocked, doesn't have that. And then there's the max kind of package that has, the data and all the features of Sierra chart unlocked. So I don't have that one. I have the first one that includes the Denali data. And I used to just have the regular, I don't know, it was number 3, whatever it was before, whenever you didn't need the Denali data to use CQG. Now you need the Denali data feed. They'll still execute on CQG, but it needs the Denali feed. I don't really know why, but I mean, they've decided to do that. It means about another $30 a month, but it's still, for all that it is, I think it's well worth it. Sierra chart has been so problem-free and just totally fail-safe, absolutely bulletproof for me for years. So I don't mind paying them a little more for that. They have a good product. As far as the Teton or Teton feed, I will give you some more feedback once I have some more experience with that. Overall, if there's a problem with CQG so far, I have known about it beforehand, so I've just avoided it that day. We'll see how Teton works out. One more question from Guy Man. Thanks for your comments, Guy Man. And the one that I'm on right now, at least of yours, is do I use the other time frames and the little oscillators at the bottom of my chart, on my time charts? And you see, I have a lot of information in front of me, right? And I use all of it. Like it's all those different things are inputs in here. It's all part of the processing, right? The little oscillator on the bottom, I do keep an eye on that. Certain things that it will do will really wake me up. But I do like to have an oscillator on a chart just to give me a rough idea of, beyond just what I'm seeing on the chart of where price is empirically compared to where it has been lately. And if I'm going to have an oscillator, I like the 310 oscillator. It's just my favorite oscillator. And on the shorter time frame charts, I have the volume bars. And that's just to kind of give me a quick alert to a spike in volume. Now, I'm going to notice that most likely just from looking at the tick chart anyway, because it's kind of built into the tick chart. If it starts printing a lot of bars, I know that the volume has gone up, right? But I found that more useful on the shorter time frames like that than having the 310, for instance. Give me a 4,000 tick chart of the ES and nothing else, I'll trade it. If that's all I've got, I'll trade it, and I'm sure I'll do just fine. Having said that, if you have a whole bunch of other tools at your disposal, and other little windows in the market through different lenses, certain ones of those I find useful, and I have them up in front of me all the time so I can just look at them at a glance anytime I want without having to click or do anything. There's almost nothing that'll make me push the button all on its own, but just having all that information and, looking at the market through several different lenses at once really helps me try and only take the best ones. That's the best way I can say that. Anyway, guys, I'll try and keep it short. That's it for today. Thank you so much for watching. As always, keep the questions and comments coming. Grab my cheat sheet newsletter, daytradernextdoor.com. Thanks so much for watching, as always, guys. Have a fantastic day, and I'll see you again soon.